Hey guys, welcome back to the channel. So I've got a hot sector that has some potential: online education stocks. We're getting close to the end of summer. People are starting to think about this. Schools are starting to wonder, with the second wave coming, what's going to be the plan? Is it going to be um, part-time school? Is it going to be mask? What are they going to do if somebody gets sick? Are you going to be able to sue the school? We know that some places in California, other places in Nashville area are going online only, at least for the start. So who are the companies that could potentially benefit? We've got a couple of candidates. We've got Barnes and Noble. Now I'm primarily looking for K through 12. I know we've got the TWOUs and the CHGGs for the older students, but I'm looking at, and Barnes and Noble Education is one that primarily is, and I am interested in those. I'm interested in all the online education stocks, and I would like to look at this more in depth later, but I just wanted to make you guys aware of the sector, aware that probably there's going to be a considerable amount of hype in the next month or two when we realize how things are going and how different the landscape is. Barnes & Noble Online Education, not a profitable company, under $100 million market cap, a lot of physical stores. They do have online e-commerce component, and they do have a digital subscription thing that has grown quite a bit over the last couple of years. Let me get you the numbers on it. They gained 100,000 subscriptions to their digital platform, but not very inspiring. Okay, we move next to the next not very inspiring company, which is TWOU Mifflin, or however you say that. I know we've all had those textbooks, but they are moving into more digital. Their management on the conference call said that their gross margins will improve with the shift to digital, but they're losing money. They're not giving guidance, and they do have quite a bit of debt. Their liquidity has improved about $60 million since last year, but they lost $187 million free cash flow over the last year, if I'm not mistaken. So not real inspiring. Could get going though, as the stock has not run up much, and it is a smaller float. Well, I shouldn't say that. It's actually 124 million share float, but still has some potential. As we look next to, let's look at that on a monthly real quick before we move next to Rosetta Stone. Yeah, good tight monthly closes down there, so worth keeping on the watch list. Rosetta Stone. Now, this is the latest one that's been hyped up by Citron. Basically, the good thing about Rosetta Stone, it's only a 23 million share float. They have great reviews. They only have 500 watchers on StockTwits. It's under the radar. They don't sell physical stuff. They, they've indicated that they'd be willing to sell the company, and they're kind of already hooked in with some Google Chrome features. So Google would be a logical company to buy them out. They're only a $600 million market cap, and they're undervalued in some ways based on price to sales and things compared to other companies, but they too are not profitable. And I did not see a way for them to get profitable when I was reading through the conference call. Perhaps if they sign up a whole bunch of new schools for their literacy and stuff, it'll get the job done. Now, moving to my favorite would be K12 LRN. Citron has also pumped this one. This is like a real company with $1 billion in sales, primarily for remote students, unusual situations, athletes, things like that. They got 5,000 certified teachers, and they're actually profitable. That's something I like. They're valued highly based on a price to earnings ratio, things like that. But on enterprise value to sales metric, they are not as highly valued as some of the other online educations like the TWOUs and stuff. Now, my question with them, okay, I know Citron says that they're the Teladoc of online education, and they're the closest thing to that, but their support system is sort of the smallest part of their business. So my question is, what's going to be their relationship to schools? How much of the curriculum is going to go fully managed by them? How much are they going to have the teachers be the regular, the school's going to have the teachers still be the primary teachers and have LRN be a support system? They've got 30,000 students being supported through their products. They're in only about 11% of school districts, if I'm not mistaken. They've seen a 49% year-over-year increase on their website and 16% year-over-year application increase. This is from the Q1 report in April. They're growing their revenues. Their debt is not a problem. I mean, it is a low margin business through about 3.5%. 39 million share float, not too big. It's just, I admit, I don't really understand the space that well. I just feel like it is going to be hyped up. It's going to be a lot of online stuff. And I think that LRN is probably the company that is the most equipped to handle it. Now, it has run up quite a bit, as you see the daily chart. Looking into the monthly, it has run up past resistance. So it's definitely not a low risk entry, but it's probably the one that's going to do the best, if I had to guess, going into the fall. So guys, what do you think about online education stocks? Do you think they're going to be hyped up, or do you think people are just going to carry on and the public schools are just going to sort of do it on their own a little bit more, and these things are not really going to be big investments? I think they're going to be pretty huge going into the fall. So until next time, guys.